The Democratic National Committee announced all of the convention speeches, including Biden's, will be now delivered virtually from across the country. The DNC is set to kick off its convention on August 17th virtually. Time for the word on Wall Street. Joining me right now is the Bahnsen Group CEO and managing partner, David Bahnsen, Portfolio Wealth Advisors President and Chief Investment Officer, Lee Munson, and IHT Wealth Management President, Steve Dudash. Great to see everybody this morning. Thank you for being here. First up, Goldman Sachs is warning that the approval of a COVID-19 vaccine could upend markets. Goldman's telling clients that the approval could spark a sell-off in bonds, shifting money from technology stocks to cyclical stocks. David, your thoughts on this? What kind of movements would you expect should a vaccine happen sooner rather than later?
Yeah, I thought their piece was interesting, Maria, because it did kind of suggest that something ominous would happen, and then you read the piece, and most of it sounded quite positive. I think a rotation from the big tech and some of those real cyclicals into some of the areas that have been underappreciated would be a good and healthy thing for markets. And certainly the yield curve steepening would be really appreciated by the banks and some of the financial stocks. And so I'm not sure that I would see it as a totally negative. The only thing I might disagree with is that they don't believe that a vaccine has been that priced into markets yet. I think a lot of it has been. I think that the markets largely expect a vaccine is coming. There's certainly more upside ahead if it were to come, but I'm not sure that it would be upending of markets as much as it would just sort of shift some of the underlying ingredients.
Yeah, I think I agree with you. I mean, no surprise that we would see a rotation, right? I mean, you know, toward the companies or securities that investors think will be the growth stories post a vaccine. So that's not such a surprise, I guess. Initial jobless claims are going to be coming out this morning, 8:30 a.m. Eastern. Today, we'll have those numbers in an hour and a half. That's, of course, ahead of tomorrow's jobs report. The ADP report yesterday reporting a major miss in private payroll additions. Steve, what are you expecting today? And do you expect a weak spot that we're entering in terms of jobs right now for the month of July?
Has there ever been a time where estimates have been so wildly apart? I mean, you've got people saying plus millions on the upside, plus millions on the downside. And I mean, frankly, we think that it won't be as strong as it was in June. We'll see some gains, marginal gains, but there's a lot of uncertainty still around there. However, like you guys were just touching on, the most important part moving the market here moving forward is the fact in the next 60 days, we should have clarity on what the vaccine path looks like. Maybe not the final results, and who the ultimate winner is, but a really good idea what that path is. And that's why we keep telling people right now, you know, if you made money on the tech run in the COVID world, that's great, congratulations, but you have to start positioning yourself now for the post-COVID world. What does this world look like 1 year from now? Is it still going to be the same handful of tech companies that have run through the roof? Probably not. You guys have just mentioned it. There needs to be some rotation. The Zooms of the world that have done wonderful in the last 6 months, do you think we're still using it to the same degree 6, 12 months from now? Because I don't. I think a lot of people are zoomed out. And so if you're going to buy or stay in the tech world, be specific on it. And if you're not, look at the ones that are getting crushed right now, like the airlines. The government has come out and put a floor on it, or not officially, but they're coming out to put a floor on it. Don't you think the world travels more 12 months from now? Don't you feel that people are sick of doing this? The video calls, I would much rather be sitting in your office right now talking about it versus doing it video virtual like this. That is happening across the world. So
I think you make
picture
good points.
what it is 12 months from now and buy into that world, not today.
So you want to get ahead of it, how our world changes
Get ahead of it.
within a year.
Absolutely.
David
Buy
Bahnsen,
the airlines, buy the casinos.
Yeah, I see you
buy
nodding.
the telemeds.
It sounds like, okay. Yeah. So telemeds is something we're doing now. So I guess then you believe there are some things that will still penetrate in the digital economy once we get out of this, like telemedicine.
100% agree. There's going to be winners. Amazon is a winner. I don't care what happens with the vaccine tomorrow. Amazon's going to keep doing what they've been doing. People aren't going to change it, but parts of our lives will be fundamentally changed forever. The telemed world, which, to be full disclosure, I own a piece of, but those have fundamentally changed how people have the doctor experience. That won't go away. The Zooms of the world that are more short-term flashes, I think those revert back to the mean a little bit. So if you're going to stay in the tech world, if you're a Robin Hooder and you made a bunch of money, congrats. But you got to be a lot more selective. And like you were just saying, and Goldman has said, start rotating your portfolio now. Don't wait for that vaccine announcement to come out 60 days from now.
Yeah. What about the dollar? It's still struggling. The high number of COVID-19 cases could slow U.S. economic recovery. Lee, you're focused on the dollar. What's your take?
The dollar's been my sort of post-COVID trade. As opposed to tech, I've been really in the gold miners, energy. I've been long the emerging markets, and that's helping those positions. I think the dollar, what nobody's really talking about is with this dollar decline, I think we see a pause here. Everybody in the narrative has said that the weaker dollar has helped stocks in July. I think that's going to continue. I think the real story is nobody's talking about the 10-year Treasury being, at 0.5 something for the last 2 weeks. I think we're going to get an opportunity here just on a technical balance. If you look at the charts, for those people that look at charts, everybody's looking at the dollar and thinking that this decline, we're at this sort of kiss or kill moment where the dollar's found support on a technical basis. But if that continues to drop, because honestly, we're printing more money than Japan, which just kind of sounds weird if you would have told me this a year ago, that's going to continue to give momentum behind things like the gold miners or gold trade, which is directly inverse to what the dollar is doing. And I also think it's going to give a lot of credence to people like me who like the cyclicals, like the first guess, we love the value names. That's like the next big trade for next year. But also it's causing your entire emerging market basket to rise. So I think if you see a little dollar strength over the next week or so, I think that's your opportunity to get into those emerging market names. Definitely stay away from Europe, stay away from Japan. There's a million reasons why I think those economies are just not going to have the oomph that emerging markets. And so if you want to diversify out of the United States, again, not just be in tech or not be in my favorite places, which are the cyclicals, the banks, the industrials, things like that, then I think that the dollar weakness, if that subsides over the next week, I think you get into the emerging market names, and I think you ride that. I think that is going to continue because the Fed's balance sheet is going to have to continue to expand for the next 6 to 12 months, period.
Getting into emerging markets, meaning going into those local markets like China, India, Brazil, et cetera, or buying companies that are exposed to the emerging markets, Lee?
I would much rather own the actual foreign companies through, you can just get a diversified ETF that's invested in China or that's invested in emerging markets in general. Because we have to remember, the emerging market performance over the past 3 months rivals that, if not has done it slightly better than the NASDAQ, than the Qs have been. And that's, again, based on that dollar weakness. And so that's where I'm at. I understand the play on why we want to buy Caterpillar or plays that, sell a lot there. I want to buy those little curves. Also, Maria, remember, a few months ago, these things were selling at book value. So I think to get the same type of oomph as the NASDAQ 100 with a completely different valuation structure, you can make money being a value-oriented guy like me today in this market, but you have to look at the dollar to help you make that money.
All right, we will leave it there. Great conversation, guys. David Bahnsen, Lee Munson, and Steve Dudash. We'll see you soon. Thank you so much. We got a market that has completely rolled over.